Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the review of Nigeria's Q4 2023 foreign trade in good numbers. Last week, the National Bureau of Statistics (NBS) published Nigeria's fourth quarter 2023 October to December foreign trade in goods, physical goods, merchandise trade numbers, which revealed that total foreign trade improved by 38.2% or 7.4 trillion naira quarter-on-quarter to 26.8 trillion naira from 19.4 trillion naira recorded in the previous quarter, Q3 2023, July to September, and rose 129% or 15 trillion naira year-on-year relative to 11.7 trillion naira in Q4 2022. For the year, total trade improved by 37% year-on-year to 71.9 trillion naira in 2023 relative to 52.4 trillion naira in 2022. Foreign trade is the exchange of capital, goods, and services across international borders or territories. Foreign trade is all about imports and exports. All countries require goods and services to satisfy the wants of their people, and no country can produce all the goods and services it requires. The country must buy from other countries what it cannot produce or can produce less than its requirements, importing, and sell to other countries the goods it has in surplus quantities, exporting. Based on the report, total imports rose by 56% quarter-on-quarter to 14.1 trillion naira in Q4 2023 from 6.3 trillion naira in Q3 2023. Similarly, it increased by 163% year-on-year from 5.3 trillion naira in Q4 2022. The increase in the value of imports can be largely attributed to the devaluation of the naira at the official market. The naira depreciated by 14.5% quarter-on-quarter and 50.1% year-on-year from 769 naira 26 kobo per dollar at the end of September 2023 and 449 naira 5 kobo per dollar at the end of December 2022 relative to 899 naira 89 kobo per dollar. Total imports from 2023 stood at 35.9 trillion naira. In the same vein, total exports rose by 22.7% quarter-on-quarter to 12.7 trillion naira in Q4 2023 compared to 10.3 trillion naira in Q3 2023 and up 99.6% year-on-year from 10.3 trillion naira recorded in Q4 2022. The quarter-on-quarter growth can also be linked to the naira depreciation within the period under review, as oil production stayed flat at 1.35 million barrels per day between September and December 2023. Total exports from 2023 stood at 36 trillion naira. Nigeria's trade balance was negative. Imports exceed exports at negative 1.4 trillion naira in Q4 2023 from positive 1.3 trillion naira trade balance in Q3 2023. Imports accounted for 53% of total trade, while exports 47% in Q4 2023, compared to a ratio of 47% to 53% in Q3 2023. The trade deficit can be attributed to the significant rise in imports of vehicles, aircraft, and machinery. The top 5 trade destinations in Q4 2023 include export trading partners such as Netherlands, 15% or 1.9 trillion naira, India, 9% or 1.1 trillion naira, Spain, 8% or 1 trillion naira, Canada, 7% or 907 billion naira, and France, 6% or 799 billion naira. The top import trading partners include Singapore, 36% or 5.1 trillion naira, China, 15% or 2 trillion naira, Belgium, 8% or 1.1 trillion naira, India, 6% or 909 billion naira, and the US 4% or 512 billion naira. By ports, Apapa Port accounted for 94% and 77% of total exports and imports in Q4 2023, while Tin Can Island followed with 3% and 8% of exports and imports in Q4 2023. Now here are our thoughts. 1. The share of agriculture and manufacturing products in total exports stayed low at 3.7% and 1.9% respectively in Q4 2023, while the share of oil and oil-related products remained at 91.3%. This shows that the naira will continue to be vulnerable to the dynamics in the oil market. 2. The top agricultural products exported in Q4 2023 were sesame seeds, cocoa beans, and soya beans, representing the total of 372 billion naira or 2.9% within the quarter. There should be more focus on expanding the exports in this area to create a steady FX supply and jobs. 3. Based on imports by economic regions, Asia and Europe account for 91.3% of the total imports. Imports from the African region remain meager at 1.7% in Q4 2023. Manufactured goods from Asia accounted for 54.9% of total imports, mostly from China. 4. It's interesting to note Nigerians spent 5.4 billion naira on importation of salt for human consumption, with all imports from Namibia as well as granite, mostly from China, costing 1.5 billion naira in Q4 2023. 5. In 2023, apart from mineral products, mainly petroleum products, vehicles, aircraft, and parts and boilers, machinery, and appliances accounted for 22% and 14% of total imports, with a combined value of 12.8 trillion naira. On the other hand, the import of live animals and animal products, vegetable products, as well as animal and vegetable fat cost a total of 2.4 trillion naira in 2023, which are areas of quick wins for the government to develop and reduce pressure on the demand of FX. 6. There is a need to decongest the Apapa port for export, given the concentration of 94% for export and 3% for Tin Can Island. This can make exports more efficient and improve business activities. 7. The top major traded agricultural products in Q4 2023 were cocoa beans, 42 billion naira, flour buds, 56 billion naira, and sesame seeds, 23 billion naira. The federal government should intensify efforts to increase the exports for these products. 8. To improve non-oil exports, the government should come up with a clear blueprint, highlight the opportunities, and ensure implementation to grow Nigeria's share of exports to diversify its FX sources. 9. Additionally, deliberate efforts to add value to our abundant resources are essential to earning more value from our exports rather than exporting raw materials and importing finished goods. This will boost employment in the country and reduce insecurity. 10. Remarkably, robust infrastructure, adequate power supply, and consistent policy, trade, fiscal, and monetary direction should be given more priority. 11. The private sector's support is required to put these in place as government revenue continues to come under significant pressure. The sector can play a critical role in supporting the government's efforts by investing in value-adding activities and promoting the export of locally manufactured products. In summary, it's evident that efforts must be intensified to address weak export challenges by prioritizing policies that support the growth of manufacturing and agricultural sectors, promote value addition, and provide an enabling environment for businesses to thrive. Thank you for listening. Please join us same time next week for another exciting, interesting, and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.